Lesson 4: The impact of geopolitical events on the markets. Geopolitical events are events that have political or social consequences, such as elections, wars, and natural disasters, all of which we have been seeing a lot of these past few years and currently in this year. These events have a significant impact on the financial markets as they can affect investor sentiment and global economic growth prospects. For example, a major terrorist attack or geopolitical conflict can cause market volatility and uncertainty, leading to the increased demand for safe haven assets such as gold and the yen. Similarly, changes in the government policies or regulations can affect specific industries or companies, causing their stock price to rise or fall. As a trader, it's important to stay up to date on major geopolitical events and understand their potential impact on the markets to make informed trading decisions. Now, to use this for kind of the general sentiment, or the bias of the move of the market. Are we going to be in a downtrend for a few weeks, months, days, whatever? How depends on how big the event is. Now, you don't trade these events. Just because something bad happened doesn't mean you immediately double down on it dropping. It's just follow these to understand the market, but don't use them as trades themselves. So don't religiously watch the news and think of every single headline as this or that. Just be aware of what's happening in the world and then go back to trading the markets on a day-to-day basis. Or if you're a swing trader, this may play a little more into part what you're doing. But most of this is just understanding the world, the markets, and all that. Definitely no trade signals from these events, just the flow of the markets that you could kind of expect to happen. And when it does happen, you're not surprised at why something happened because you're aware of these events that happen. For example, when the whole Russia thing happened and then they put the sanctions on them, that the Russian dollar dropped insanely. I'll pull up the chart. So you can see here, February 18th to March 11th, we went from 76 to 134. Then we quickly dropped from March 11th down to June 24th, down to 54. And now we're kind of back where that equilibrium was prior to that event. So big swings. Then anyone who was long from here, or anywhere above the way, guess what? They all got taken out. And now we're at 76, where we were kind of at right before all that happened. Everything kind of leveled out again. So you can see the news has big swings. There's really no clear direction. If you thought it was just going to keep going up forever, eventually it settles back down past where it was. And now we're back to where price has always been. So just understand what's going on and don't get surprised anything that happens. You could see something similar here happened. Had a spike again, then it came back down. Spike again, came back down, spike again, reset even lower than this back here, and then back in that range.